Joins me via Skype. Now, we thought it was over. I mean, we had a couple of really good, strong rallies. What today has proven is it is not.
That's absolutely correct. Inflation continues to be a very, very significant issue. But keep in mind that we should really be expecting this, given that confluence of events that have taken us here, from very, very significant fiscal stimulus during the pandemic to elevated household savings. All those things have combined to take us where we are today, and of course, helped by Russia, Ukraine.
So the market, before we had that little burst of optimism last week, the market had put on a bit of weight. Now it's lost most of that, down 6% in terms of 2 days of losses. The old question, I make no apology for asking it again and again and again. How low do you think we go?
Well, Richard, it's hard to tell how low we will go. I don't think we're going to have a dramatic sell-off from here. I think the worst, or much of the worst, has been priced in. This is just a surprise. I think of this as something like a whiplash event. It was well above expectations, well above the last print in terms of headline CPI. And so markets immediately started to worry about what that meant for Fed tightening. And of course, what we know about economic cycles is that typically central banks often have something to do with choking off those economic cycles and causing recessions. So this just heightened recession risks significantly, sent stocks down, but that often is the kind of visceral reaction we get the same day data is released.
Christina, look, I know many private economists do not, and certainly the IMF and the World Bank does not have a formal recession as their base case scenario. But I do wonder, at what point does it become a sort of a statement of the obvious that there's likely to be a recession?
Well, I think it's far less obvious right now in the United States than, for example, the Eurozone. The U.S. economy is in much better shape. That doesn't mean that recession risks haven't increased today. They have, but it is still in pretty good shape. And so you could see a soft landing engineered by the Fed in that we could see companies cut job openings, but not so much, conduct large-scale layoffs. Well, so that gives us a path.
Now, you see, that really is that's the nub of it, isn't it? It is this idea that because in the US, the inflation is often regarded as demand-led versus supply-led in Europe, there has to be a let-off in demand. Do you believe unemployment has to rise as part of this process?
I don't think it has to, because what's the real issue when it comes to the labor market? It's wage growth. So if we can cut job openings, then employers don't have to keep raising wages to retain and attract employees. So it can happen. I know that it is something of a Goldilocks scenario, but it can happen, and I believe it will.
Christina, the only thing I know, actually I'm asking everybody this, how are you going to make the most of the summer? Now I know it's difficult, but are you actually going to make the most of the summer? Get yourself off on a Friday, go to the beach, go to the mountains. Are you going to have a bit of a rest this summer?
I definitely will. And my husband said to me, where can I take you, someplace expensive for our anniversary? And so I said, the gas station.
Fill the tank. Oh, I love it. I wasn't expecting that. All right, lovely. Well, before the summer's over, we'll get you down from Greenwich, Connecticut, and we'll talk face to face. Lovely to see you. Have a lovely weekend. Thank you very much indeed. As on Crespin's Business. Now, last night I watched